Now bring it home, and we're talking about FirstRand, which includes First National Bank, Westbank, Rand Merchant Bank, and Ashburton. Market cap here, 290.2 billion rand, PE of 12.2, and a dividend yield of 4.6%.
So the same kind of metrics. There you go. I mean, we're talking about the largest and most significant South African banking operator, 290 billion rands. But you know,
enjoying a nice little rally in the latter stages there.
The late 2015 slump you see there was the Nenegate incident, and in the course of 2017, 2016, the volatility associated with sovereign downgrades.
And that's the kind of graph you want to show to our politicians when they say that the finance minister has no impact on the market. As you rightly point out, Nenegate really hitting our banks hard. Where to from here for FirstRand? Because that's the question any investor who wants to put new money into the stock is going to be asking.
Listen, I think, if you look at the last 3 years, it hasn't been great for any of the banks. It's been a very constrained macroeconomic environment, particularly on the consumer side. But let's not forget that these banks are very cheap. You're getting good dividend yields, and from an investment perspective, if you invest now, when we get a resumption of consumption and people start spending more and lending books start to grow, you'll see some of the capital growth. So it's an environment that I think is probably conducive to an investment in banks, because you've got high dividend yields, very well managed businesses, very conservative.
In fact, our banks stack up from an institutional perspective with those top institutions in the world.
I'm not surprised. And if you look at the nature in which management approaches risk taking on risk on their book. I mean, FirstRand, for example, 3-4 years ago were criticized for not going into Africa, but they said, listen, it's just too expensive and we don't fully understand, what risk we're taking on. And 3 years down the line, they proved to be right.
Well, we gave up this one. So talk our audience through our relationship from an investment perspective.
Look, we liked them because we thought they were the most technologically advanced bank, and we thought that they could do what I've been referring to, which is cut costs by virtue of moving people out of the branches and out of the paper and into their mobile apps and so on and so forth. So far, so good. But at the beginning of 2017, with all of this noise around bad politics, replacing of the finance minister, and the scope for sovereign downgrades, which has a direct effect on the banks because it determines their profitability, their funding cost, the cost at which they raise money in order to on-lend it. We exited that position. Since then, it's bobbed around, come up, come down. But my concern is there's going to be more bad behavior on the political scenario in the next 18 months until it becomes clearer what South Africa's path is, because we've got an ANC elective conference and a national election to come. So for me anyway, the scope for that further trouble keeps me away.
But isn't that trouble priced into the stock?
I think to an extent, you never really know whether something is fully priced in, and when it comes to politics, it could probably become a worse scenario than what we imagine.
In your opinion?
I think it looks cheap enough. I like the dividend yield. I think the dividend yield is still pretty much intact, and I'm happy to hold it through the cycle.
Well,
I think you can make that argument.
Can you also tell us when we got out of it?
I think we got out of it in about sort of February, March, just before the follow-on downgrade. So somewhere in amongst that hacksaw blade to the right-hand side. It's hard to say. I think we exited them at around 50 rands a share, and you can see.
Would you be tempted to buy in again?
No, I think we should wait. I think they're not going away. They will remain very profitable. They'll continue to justify their current, dividend yield expectations, but the rating remains low because of people's anxieties about our economy and credit extension and so on and so forth.
Hot or not hot?
I'm going to go hot on this one.
I'm going to say not hot for now.
You would have surprised me had you swung the other way.